You just timed out everybody. Are you trying to cement your leadership in the pigeon whales? Finger slipped 6 times. Can you give me thought? Me holding my AMD weeklies that are down 80%. Welcome to the club. Make chat pigeon whale only. That's ridiculous. $12.69 is now over. It's the most bullish time of the day. Also, we suspect it's the time at which some dark pools dump. Moonwind for treasurer. Fuck you, Viking Daddy. Thank you, President Darth Dan. Subverting your silencing. Well done. Safe to say that ETFs containing GME are not reported in the SI. Yes, very safe to say that. So, if you're a short hedge fund or AP and you go to an ETF and you make a bunch of GME and then you sell that GME, dropping the price. The invert, and then when that fails, the inverse of that is you buy GME and return it to the ETF. But this is not a short sale. This is creation, redemption. Is the return to synthetic? Who the fuck cares? At Moonwind, MPFGA, make PiFi great again, Moonwind for mod. That's not happening. It just, yes, it just acts like a short sale. Clip? All right. How is that not market manipulation, punishable by death? Fully legal and allowed for authorized participants in ETFs in order to provide liquidity. Liquidity is the name of the game. The market wants a lot of it, and they have allowed it to happen. Because in the past, things would happen like someone would want a share of something, and there were no shares. Carl is not someone to idolize and follow the actions of. Ask yourself, would Carl do it? If so, then you probably shouldn't be. Then you probably shouldn't. Be more like a Dan. We're cute, cuddly, alcoholics, druggies behind our Wendy's dumpsters. Thanks. Are you listening to the people? Mod me. We will not be silenced. Shut the fuck up, Moonwine. There. I deleted all of Moonwine's posts. You ever teach people spreads? Say, call debit spreads, since these options are too expensive for most. No, I don't teach spreads because they're too complicated for most. Happy money. Unfortunately. But yes, I do agree. They also require margin, which most people do not have margin accounts that are involved in this. They've made their accounts cash in order to dodge share lending through the brokers. Yeah, unfortunately, although I do expect as people become more and more educated on options, that they will avail themselves of the possibilities offered by credit and debit spreads. I find it weird that Muno has gone all in on this group. I charge an extra $150 for spreads behind the dumpster. That's not even that much more, but it's so much extra. The Ghost of Dan. Should I sell my Jan 28th 360 call? Why? Do you want to capture your loss? I keep making money on options on other stocks and then losing my profits on GME weeklies. Do you think you're the only one doing that? Stop spamming Moonwind for treasurer. It's not happening ever. Not today. Not tomorrow. I don't know what Lamborghini is doing with their NFT. People just riding the hype train, right? This is all marketing. So given what we know now, the composition of GME and various ETFs and the time it takes the ETF share creation to fail and be returned, is it possible to calculate the max ETF created shares at a time? Yeah. You can just calculate how many GME shares are available in ETFs, and that's how many they can borrow a day. Did you say marketing needs something? I'm good, like K. I mean, I do. This channel has got an extremely low amount of viewership because of all the shadow banning. I should probably stop cursing and saying things like cunt on stream, but I just love words. Do you know why the push to exercise? When exercise options, how would that provide more buying pressure than just buying 100 shares? So two reasons, happy money. First, shares bought at market can be satisfied with bona fide market making liquidity provisions. So they are able to create a share to satisfy your purchase order. Exercising options does not allow that. So the only way to get a synthetic share to satisfy the exercise of an option is through borrowing it from an ETF, right? Which would compound their losses on that naked call. Or they buy real shares at market. In the event of a run that would put, 300 strike calls in the money, the amount of hedging needed to be done would be very significant. And so most of the ETF shares at that point would already be borrowed. And so you'd be putting a demand on the real stock itself, like on the real shares, as they would have to go out into market and within T+2, scrambling to find those shares. And we know, they're not covering their gamma exposure adequately, right? Like they're not remaining truly delta neutral. Hence why they have so much gamma exposure throughout the year. Be more kid friendly. A puppet might help. A puppet might help explain some of these concepts to some of the people asking me questions. Exercising options creates more ETF FTD. Also, the loss on the option, right? But yes. But the ETFs can dry up, right? Because they have a limited supply day to day. And so if you're exercising options at a point where there's no more synthetic liquidity in the ETFs, you're creating a margin call on real shares that they need to go out into the market and buy in a lit exchange. And probably, if they're not delta neutral, in excess of their hedged position, also creating more pressure. How can they tell the difference between a real or a synthetic? Well, one of them can be obtained through market making, like bona fide market making, or an ETF versus going and buying one. And also the whole lead up into a MOASS type situation requires putting extensive pressure on their margin, right? Forcing them to internalize large amounts of money in the hopes that their margin blows up and they can no longer sustain the positions. And exercising compounds losses for them, and so beneficial. Super chat read, please. Sorry. We all know there's one true catalyst. That's CC's getting called away. Moonwind for MOASS. Oh boy. Moonwind's the narcissist you're trauma bonded to because he stole your chair. That's the demand zone. I mean, the uptrend is sustained. It's just that we're not going to break through the pressure of those puts on this low of volume. Yep, happy money. The emphasis, a lot of people push the emphasis on like exercising, and like exercising is great, don't get me wrong, it's the icing on the cake, but the real benefit of retail buying far dated options and holding them is, one, if the initial hedge is synthetic and they hold them past T+9 plus 35 calendar days, then they have to re-hedge with more synthetic shares. Two, on price movement, as they cover those FTDs, the amount of that hedge against the option chain has to go up, forcing more buying, right? So retail can essentially create a gamma ramp. The exercising of that ramp could create a gamma squeeze. Exercising also, ties up liquidity more, which is nice. No problem, happy money. But yeah, the importance of retail holding far dated options contracts is the delta. As soon as that delta dropped last January, price came down. Same is true for Feb, June. As soon as people started selling off their options and closing out their weeklies and their short dated calls that retail buys, because we're mostly broke, they were able to deleverage that hedge and then start pushing the price down. So we know that the hedge ties up a significant chunk of their margin in order to not get burned on those naked calls. And then by exercising those calls, you tie up even more because they don't hedge effectively or remain truly delta neutral. Can retail create a gamma ramp? Well, if there's something else applying pressure to the price of the stock, yes. They hedge themselves with calls as well, but then the call, if you hedge a call with a call, the call has to be hedged, which would then have to be hedged with another call, right? It's, you just, the volatility in the options chain would go off the charts, right? And that puts pressure on the variance swaps, which is what created like the Volgavana squeeze last January. Yeah, that's like callception, essentially. Which adds additional weight to the chain's delta. And then if suddenly if the price gets so high that it goes off the options chain, there's no more strikes available for them to hedge with. It just goes nuts. Clip what? Volga Vana. Check out use Zinco 83's DD on variant swaps. Happy money. They're volatility Greeks. Thanks, Carl. There's the link for anyone that wants to read about it. Citadel Securities versus Citadel the market maker. Very different. It's very hard to burn a market maker. I've heard about the variance swaps. I try my best not to have my head explode while ingesting. Fair enough. It's a lot. It's more, all of this shit is more than any one person should ever understand about the market at once. So it's a bitch. I remember there was once a time when I just bought stocks because I thought they were going to go up or down. It was beautiful. But because if you're covering, you're driving the price up, right? And if you're shorting into that while simultaneously driving the price up, you'll either stabilize the price like we're seeing now, or if buy pressure exceeds short pressure, then you're going to drive all of the short position you just opened out of the money. It's Volga Vana. Who buys their own shorts? I mean, yeah, see if the broker allows for partial exercise or sell and buy shares. If you only have one contract, Jason Bennett, those are your options. I'm not making you a mod, Moonwind. I don't trust you. You stole my chair. You're a chair thief. I'm not gonna mod some fucking Coloradian chair thief. Coloridian, whatever the fuck you people are called. Horse whisperers. Midwesterners. If I'd had my chair, we could have MOASSed already. I stole your heart and you modded me, right? Right? It's true. You did, Carl. Planeswalker. uh, the dates Bob posted for January can be covered before, right? Yeah, but why would they? Unless they're presented with a large amount of risk, they're not going to cover in advance. Big down day. Where's Koala? I don't know. Yeah, you bring weight to the delta. Your contract has delta. Options are retail's way of driving price action. It's very simple. What's up with Ford the last 2 days? Tesla's Aura? I guess so. Have you looked up at the charts how the VW squeeze lined up with the market crash in '08? Some have said it was the reason for the crash. Yeah, I've heard. There's a lot of speculation surrounding the VW squeeze. The most likely of all the conspiracy theories surrounding it is that Porsche saw an opportunity to make a shitload of money and took it. Um, but yeah, it fell very much in line with that. Don't forget that massive amounts of margin were at risk, right? Because of the crash, which creates an environment ripe for short squeezes. And multiple primes fail. So margin positions that they were sustaining, whoever took on their liabilities may not have wanted to. Risk aversion hit an all-time high, right? What percentage of retail do you think is holding options for the Jan-Feb period? I don't know. Maybe 10% at best. I don't think a lot of people understand short selling or the logic behind why you would do it. I don't think they understand that the shares have to be returned and thus price action why. A wide bid ask spread ultimately reverses. Yeah. I would agree if they weren't so obviously short the entire sector, happy money. I think they are well set up for a market crash currently. If 50% of retail had options to exercise, would that be a catalyst? Absolutely. Yeah, I mean, when we were just focused on GameStop and we were really paying attention to the broader plays that entities like Citadel and Susquehanna were making, um, I would say yeah, it looked bullish to have a market crash. But now if you look at the scope and this just like massive like consumer discretionary wide sector short, I think a market crash would probably be beneficial for them ultimately. Not to mention the fact that it appears that a very limited amount of their liability is actually in the stocks that they're short through because they're short through ETFs. And so their obligations are to the ETFs and not to the underlying. I'm just gonna clip like the last